I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go straight to the charts. Bada bing, bada boom. Let's go. So we were talking yesterday about these support and resistance levels of reclaiming this range. And let's go back to where those broke down and tried to reclaim, shall we? So we tried to come back to this and support and resistance level. There was a previous daily level that we bounced off of, which also coincided with this 618 bounce, this golden pocket bounce of the 0.66 region, and we gobbled up those longs that we were, those shorts rather, that we saw, those big bubbles yesterday, and now we're starting to come back down and eat into, surprisingly, the liquidity here. Are you getting a shoulder, head, and a shoulder? This pitch fan on Coinbase chart is we were at the 886 region and we're starting to break down at the 786 region. Could we come to the 706 region at 28694 and even lower at 28173, or the 65 region at 27920? It could be in the cards. We talked about the pools below. What do we mean by pools below? We're trying to save you time. This is High Block Capital. It is a $70 a month service which we provide to you each and every day for free, which is why you should consider subscribing and think about hitting that like button, and let's look at the pools together. What do I mean by pools? Well, it's when people leave their liquidity in the charts to be burnt to a crisp by the market maker for not paying themselves or using a stop loss. So let's see who got burnt to a crisp today, shall we? Let's go into this. And previously, the bubbles from yesterday, they came right up to that 328 million at 30,469, and they knocked out that guy and said, nah, we're good. And then they dumped on all of the longs. And now are they continuing to dump on the longs or not? You are getting 10 billion in short imbalance on this 1 minute chart, which only goes back 6 days. But if you've been watching this channel for the last 2 weeks or so, or at least a week when we had that rise to the upside, we had a lot of heavy bubbles just like this size down below, and we marked some off in the charts, and the previous bounce here was taking out one of those bubbles at a $300 billion level. So we're going to see, are they going to V-shaped here and get these shorts out, or is this reasonable to assume that they might be changing the narrative to get the longs this time? So if they do retrace, it would be up to this half of the vector candle of this fair value gap, which would be some of these 100x pools like this guy at 29,671. 50% of the vector candle also coincides with this 100x guy here, but it's relatively sparse in terms of caked upness. If you look at this little bit of happiness down here at 2871, they could come down to this, but we don't have much history to go by here. We lost it all to father time. So let's go to the higher time frame to see where that's located. We'll skip the 12-hour, go straight to the monthly. Actually, let's go to the 7-day. How's everyone doing out there? So we'll make this compact. Yeah. What's up, Snowman? Thanks for stopping on in. So we're going to take a look at the monthly chart, shall we? If it will load. It takes a lot of data. All right, so come on, let me zoom in, please. So they came down into this region on this 7-day time frame, and it doesn't look like much because we did have more to the upside as of yesterday, but you got to look at the higher time frames, folks. This is why we juxtaposed that. We kept reminding you about the 3-month and the 6-month, and I was liking the 6-month in terms of clearing that spy balloon up above, so we could be seeing this retrace into the liquidity, and that could have been a stop hunt rise before they drop it and continue to drop it. You never know. So you always got to pay yourself and keep yourself protected at all times. So they came into these guys here, not that much on this time frame, so we'll go a step further into the monthly as we expand our vision into the external liquidity pools. Let's go, time is a ticking, man. All right, so on this time frame, you got kind of an even Steven feel. You got all of these single digits. There is not that much below here on this monthly time frame without having to gap down all the way to 27 to get these double digit pools below. Let's just say about 60 billion here, and then you got some more double digits below here at 25.2. There's been a lot of people narrative-wise speaking for a long time about 25K. Although you do have these pools up above, which are also double digits in nature. We were talking about the path paved to 34K. Could that be seen? Are we going to see Wednesday drop it somewhere and then Thursday be the midweek reversal after clearing some of the longs? Just on this time frame alone, if you look at these guys down below at 22K, there is a mighty thick yellow band of 20 billion plus in each region down here, which is outweighing what's above 234K. Even though it does look juicy up there, there is a lot more juiciness down below. So that might be what's weighing us down, is the longs just refuse to take profits, and so it's coming to eat into their profits. All right. So this was where we started to see our narrative shift a little bit when we were talking about this back here before it dropped is we were saying that while you did have this 31.2 region, you do have these pools to be answered to below 300 billion, I believe, beneath 19.4, and then 100 billion at 22, and 100 billion at 25.6. So you got these nicely caked up regions below 27.6. So if we managed to gap down and Bart Simpson down to here, this entire region becomes like a whole new story of temptation to eat up beneath that region, and it does become deadweight. We talked about the idea of the tug of war, and the side that wants it to go up actually the longs actually work against their trades and the shorts work against their trades, right? So the more shorts you have, the less likely it is to go down, and it goes up in their face, and they lose the battle but win the tug of war. So they tug the price action towards them, and in this case the longs are in larger supply, so they tug the price action towards them and lose their trades. So the majority are the losers in this case of trading. So you always look for where the bigger pools and the imbalances lie. So this is where it starts to appear on the 3 and the 6 month. And you can see it more prominently here on the 6 month time frame. You got nearing 100 billion down at 13.5, and each region just has double digits beneath 19.5. That's like a good, I don't even know, 500 billion plus, and just don't have that up here fighting against that. So these shorts are in the minority, which means they could get paid a little bit while they cake up these pools as they eat into this stuff. It's never out of the question. So we go into the yearly, and this was where we started to see a while ago the narrative for the 34K region not being out of the cards. You got 75 billion here, 85 billion there, nearing 100 billion at 33.2. So we could easily come into this at some stage. There are times where they let that stuff percolate while they retrace, and then let these things get thicker as they eat them piece by piece and knock out the other side as they pay them. So it's always a journey of juking out both sides. We said it yesterday and the day before yesterday, it's like Prince of Persia. You don't stay on the platform for too long, or it drops you to the spikes to get liquidated. So you have to kind of pay yourself and reward yourself as you go, or set your stop into profit so you don't get annihilated.
Fatality.
Yeah, you don't want to be a casualty of war like these guys or these shorts up here. All right, so I think we did it justice for a bit. We're going to keep it short but sweet. We'll keep you updated on how these pools change in the Discord. I'm recently trying to get funded through trading NASDAQ and stuff with my boys and girls at Momentum Master. Got 3 accounts nearly there. Got 2 accounts there, and the third is on the way. Then we'll link them all up into a nice little eval or funded challenge. So here on the 1 month time frame, you do have these pools down below and then not so much up above. So just going off this alone, you could come into this region just as easily to get to this 27.5 price. So we'll just leave that there to think about. Even though we do have those pools above, we did have those pools which were forgotten to Father Time down here, which are indicating those billions down below that we have forgotten since last week. But if you've been watching every day, you know that we have not forgotten these. So let's go to the regular chart from Binance. Okay. So yesterday, the cool news, we already deleted it, but we had this arrow here of this 100x guy that they bounced off of, which also happened to coincide with the 618 region here. And this bounce we're seeing here, if we extend this, I don't know why this is in this time frame. It might be a 4-hour time frame. Let's see. Why are we starting it there and not down here? Give me a second. Should be starting here, honestly, at the beginning of the impulse. So we already saw that kind of wick off that here on the 618. And we're talking about the 706 region being this guy. There was a 100x pool down here, which happens to be the 50% value of this fair value gap on the 4 hour. How do you calculate fair value gaps? Well, one, you could use this free indicator called fractal break imbalance fair value gap liquidity void, and it will draw them for you. But this is on the 4 hour time frame fair value gap. But if you go to lower time frames, that area will change because there's fair value being traded within that hour time. So this changes to this, and if you go to a lower time frame like the 15, for example, so the 15 has this entire candle as a fair value gap, and it will spawn that through the calculator, or that indicator will put that on there for me. Come on, man. It should do that for me. I don't know why it's taking so long. Either way, it should draw that box there. It's having trouble doing that, but that also coincides with that pool we were talking about as we saw this rise up in the massive pools of 100x that were still open here. So there could be some 100x massive $1 million trades open at 100x, so they could be coming down to this region at the 706 to finish the job and possibly reverse for midweek reversal, who knows, or they could come back down into these pools below. We saw the story. We know that there's this narrative that they could come back into these regions and get these double digits. They could come up to the 32.2. We talked about the 37 billion up there yesterday. As of this moment in time, there is not so much here, but there's more down here that they could come down to spawn some bullish divergence off of if there's an order block that's going to be hit. So yeah, that's the Fibonacci levels in a nutshell. We got that previous 618 rejection of this impulse to the downside, so it's just 618 rejections for days. Like, that was a pretty beautiful 618 rejection there. Boom, and then we dropped down. So we tried to attempt to get above it. Rejection at the 706, rejection at the 706, trap door opened at 618, boom, and to the downside we go. And then it's just 618 to 618 for days. And yeah, let's go ahead and throw on Momentum Master, shall we? Boom, heads up display. And what is Momentum Master? Well, you can get some more information and clarity by clicking the link in the description, momentummaster.info. You can go down to features and toggle all of this at your leisure, carefully crafted off of real price action and the indicators on Bitcoin's local bottom at 15K before we knew it was the local bottom, with the rocket ships that took us to the upside. And what does it all mean? You can read about the stochastic array, a never before seen formula, and so on. But we won't bore you with the details. You can find that out at your leisure. We talked about once breaking out, we would come back and kiss this AMA, the adaptive moving average, to see if we could get that support SR flip. You come up, you come back, and you kiss it. I know some people are putting out like getting gravitated up to other moving averages and stuff, but we don't keep it simple, we keep it accurate, and the adaptive moving average is a highly accurate thing, which we saw rejection on. So coming back to retest that is the smart move for smart money. So we're going to take a look at that idea. So we haven't seen the bullish nature necessarily play out here just yet. We're going to remove this for now. I don't want too many fibs up for now. Alright, so are we coming back on the daily time frame? The daily time frame is just getting started in terms of stochastic probability by coming down here, but the Williams has opened up here and we did see that cross down event. Now, we talked about the cross down event on the 8 hour on Sunday, and that's why we were not fooled at the dump then. We saw it on the 6 hour here, and it cascaded to the 8 and the 12 and the 22. Here, 8 hour gave you the cross down event, and the 12 gave you the cross down before we dumped, and the 22 did it as well. And we came down to the cloud of the 22. Now if we close beneath the cloud, then you can expect some sort of maybe bearish retest to continue to the bottom of the Keltner channel. What is this Keltner channel? This band on the outside here, this is an ATR based Bollinger Band type deal. It's just more sticky in terms of accuracy for true range. That's why ATR, average true range, will give you that nice juice where fatigue happens. And here's the center. You could look at the cloud here as the mean that it's reverting back to, and it could hold this ATR level here or break below. So these dynamic support and resistance contained within Momentum Master will have you at hello even if you don't know where to draw your fibs. It's all good. They got you with the ATR, right? So the 22-hour is starting to see a bounce, but fatigue could double bottom here as the Williams suppresses you. This is why we have the Williams on top of the stochastic RSI. So you're looking for this key level to either hold, as it did once, twice. Is this the third time for it to continue, or is the baseline going to spell the narrative to the downside into these nether regions below, which we lined up on those time frames? Going lower to the 12-hour. 12-hour also happens to coincide with the cloud, so the ATR coincides with the cloud there. You saw that previous thinning and we burst up above it. It's pretty thick here, but if you break through it and then bearishly retest, you could come down some more. Like you break down here, come up and kiss the cloud as it's thinning and then continue lower. This is something that happens as it starts to curve here. So it's starting to curve in a manner like so. So as the cloud kind of thins out, does it come back and try to like fake out and go lower? That's not out of the question, necessarily speaking, if this starts to thin. So in this previous case, it started to thin and we bounced off it as support, which was interesting to see. We had all those 5 time frames oversold. We are getting a bunch of time frames oversold, the 1 hour, the 15, the 5 minute, and the 6, I believe, and the 12. But the Williams is just getting started on possibly dumping out on you here on the 12-hour time frame. You could come a little bit lower, and the suppression could be real on the 12-hour time frame, which closes in 11 hours, which coincides with the daily close. Let's go to the 6-hour time frame. This is the sauce that we use, the 12, the 22, the 6-hour, the 4-hour. The 6-hour generally gives you incidents where the 4-hour can get some legs in terms of pushing up by that 6-hour when it's overbought. Okay, so the 6-hour was getting there pretty quickly and it got rejected at the 70 level before getting overbought. Williams acting ambiguous right now, hard to say where it wants to go, but this 12-hour suppression could be real here. And yeah, cloud is starting to thin off that massive dump. You got the cross down event with a fury, and you had that cumulative time frame volume delta sell off there, expressing the fatigue before it happened. So 4-hour time frame. So we saw this thinning of the cloud. We tried to maintain it for that bullishness to reclaim that 4-hour cloud, and it just wasn't happening, and we dumped below. So 4-hour, it still has some momentum to the downside. You're just getting started here and with the fury. So this could be a massive dump in terms of the amount that it's giving back right here, and the momentum waves are opening down with the Williams wanting to come down in a furious manner and reset itself. Once you get into the green zone with the Williams and this, there'd be a nice idea to think about longing again if it matches your Fibonacci and key levels. But this for me is not the place to think about longing anything. Even if you do get the V-shaped recovery to the fair value gaps up here, we have that 29,700 guy. This is just going to be on the chart just to remind us here. So there's a 100x guy pool of 229 million at 29671. So this 29671 region, 29700, that's kind of what, if it were to bounce, would come up to there to get that guy. Okay, so we're going to go to the hourly now. Hourly trying to make its way, everything's going down. The MACD coming out of the domain of the stochastic into the domain of the Williams, and it could come down all the way down to the Williams, and that's the point where you'd want to think about possibly seeing along. So this could meander and get suppressed, but you're seeing some curvature and oversold status on the Williams, so the hourly time frame could suggest that pool to the upside if they get some divergence here and bounce up. So it could spawn some divergence, go up to that level, and then continue down. Okay, we're going to remove that cloud, but that's just to keep in the back burner about the 12-hour cloud. So the hourly play could occur at some stage. Remember, the 4 hours just getting started, so this is for me not the play I'm looking for personally, but there are scalps within scalps within scalps, as I scalped the living daylights out of NASDAQ on the 10-second with my with my friends, partners in crime in Momentum Master. Some craziness down there on the NASDAQ. So you're getting this crossover event on the 15 here, and the baselines attempting to hold. You got a thick cloud here of resistance. The cloud becomes resistance when thick, so even if you were to pierce up above it and do a Pierce Brosnan, you get up there and get rejected off of it. It's completely normal until it thins. We've seen that many times. You come up, you reject off it, reject until it starts to thin, and then you get bought up. So the cloud, when it's this thick, is not, I don't expect it to V-shaped, but it has done that in the past when there's pure manipulation happening. So manipulation could occur. You do have those pools up above. We've seen that happen in the past. We don't have time to go back and show you, but you could see something reclaim some of these pools, at least the 100x here at 2967. We say that all the time, getting these guys out of the game. This happened before here. They got this 274 guy on a V-shaped out and then came back down. So they could do that to some of these pools at least, as they build the long, induce the long trap a little bit more. Okay, so the 15-minute cloud not in our favor here. You'd have to break this trend, this super trend, and reclaim it and hold it for it to be bullish. You could get that bounce up to reclaim some of those pools. Not out of the question. The larger narrative does express suppression. So we're going to go to the 5-minute. It's starting to thin here and attempt to reclaim, to see some shoot up on that time frame on the 5-minute. 5-minute oversold. Williams still coming down on you. So are you going to see this reclaiming of the cloud and kind of building towards that double bottom bounce to that fair value gap here? This is why I put that there. That's a fair value gap from this wick on the 5-minute time frame. That's where you would expect a potential recovery of the liquidity of this fair value gap if we were to go up. So yeah, that's about it. So I think we got it in a nice little pocket for you. That's the liquidity and the story, and I'm sticking to it. We could go back down into these regions. It's all about how you hold this cloud or not. If we go up only to go down and break the cloud, then you expect a bearish retest down into these regions at the bottom of the ATR. We can delete this now. That was an old one. This will just keep up. I think that was a fair value gap of some kind, but either way, we can do it again. Boop, gone. All right, so that's about it. Do you have any questions? Questions or comments? Yo, what's up? All right, well, I got to get ready for the New York session. Recently, we're trading the futures market in NASDAQ, which is wild on the 10-second. And we're seeing the same kind of pullback here. We had a nuke starting to play out. I'm expecting it to, on the larger time frame, to think about retracing into these regions. It's already breaking the clouds, so this is kind of a futures contract. This is kind of ahead of Bitcoin, so you're getting this paid data that's not free. It's not the regular NASDAQ, which is still waiting to gap down. So you'll see that gap down and be like, oh, it's gapping down. Well, this is because the futures is setting the tone in advance, and we traded a little bit in Asian session. We almost got our Apex account, the third one, ready to go. We'll have it done by today, hopefully, and then we can get another one. We're trying to link as many accounts together as possible. Link in the description if you want to try it out under Apex Trading. All right. Well, that's it. That's the story, and I'm sticking to it. So we thank you once again. We're keeping it short but sweet. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Check out Momentum Master if you haven't already. You don't know what you're missing out. We already got a bunch of funded people in the Discord. Please come check it out. Join us. Look at the indicators and just come hang out. Let's get to know one another, and I'll catch you on the flip. Peace.